Hello, viewers. Welcome to BQ Prime. This is Rishabh Bhatnagar, and you're watching Startup Street. Today, we have with us Kartheeswaran KK, or how we fondly call him KK. He's the co-founder and CEO of Ninjacart. For the uninitiated, Ninjacart is one of India's largest fresh produce supply chain companies. They're backed by Axel, Nandan Nilikani, Walmart, Flipkart, among many other investors. First off, KK, thanks so much for taking time out.
Hey, thanks, Rishabh. Thanks for this.
All right. So first things first, you are the CEO now. How long has it been since you assumed the position? And is the former CEO and your co-founder, Thirukumaran, still associated with Ninjacart?
Yeah. So let me probably give a quick context. It's again, see, as a co-founder, I don't think we get to play only one role, right? Like say, over a bit of last 8 years, I've played multiple roles. You always be whatever the company wants you to be whenever the company needs you to be that, right? So I used to be a CTO for the first 2 years, and then slowly got into sales, marketing, operations, supply chain for the next 5 years. And for the last 1.5 years, I'm also operating as a CEO of the firm, right? So this got triggered when you know Thiru, when Thiru had to take a medical sabbatical break. That's when I had to take charge as a CEO. So for the last 1.5 years, I'm running the company as a CEO. And Thiru is still associated with the firm, right? Like say he's still a promoter, he's a director. I hope he recovers and resumes office soon. Yeah.
Right. In your new role, KK, what are some developments that have been taking place over the last year and a half?
No, I think as a company, right? Like say, I think first and foremost, earlier we used to be a marketplace primarily between farmers and retailers. Now we have expanded our offerings to value chain players across the entire value chain, really. So we work with farm aggregators, traders, wholesalers. So we expanded our offerings to a lot more players across the entire value chain. That's primary change. Second, on top of our fulfillment offering, where we buy and sell end to end, we do the supply chain, right? In addition to that offering, we have launched 2 new offerings on our marketplace, commerce and credit. These offerings have started, fueling further expansion, further growth for us. So these are the 2 primary changes that happen on the business side. Okay, we launched cities, all of that's one side, but these are the primary change. In terms of talent side, I think we've worked in addition to build this new marketplace offerings. We've invested heavily in talent. Our investment in technology, product analytics has gone up significantly over the last 2 years. We've invested more than 50% extra into the tech product analytics bandwidth, and that has actually propelled our new vertical expansion in the marketplace. So this have broadly happened. Yeah.
Right. Thanks, KK, for that. Let's come down to numbers now. So FY22, you were about 970 crores in terms of revenues. Losses were about 300 CR. I'm sure internally FY23 would have closed now. What's your projection on that, and also FY24?
Perfect. So we grew 1.6 times last year. From 1,000 crores, we got to 1,600 crores, and that roughly in that 60%, 30% largely came from a fulfillment business growing, and remaining 30% came from the new offerings of the marketplace, which is commerce and credit. That is what helped us with the remaining growth. Burn largely remained the same at a company level. However, our business has started turning profitable, or it has started burning lesser, right? So a lot of business burn has been conserved, and that has been reinvested into our technology talent, right? So that is what that has been the change in our investment mix so far. So this was about last year. This year, if we look at, we are already crossed. So last year, I said we grew 1.6 times. This year, first half, we already crossed that number. I think by the end of this year, we should be clocking around 4,000 crores to 5,000 crores GMV. And 80%. So today, roughly, as we speak, 50% of our business units are profitable. I think by the end of the year, roughly 80% of the business units will be profitable. So with more business units turning more profitable, I think we're in a much better path.
Right. Very interesting that. So FY23, about 1,600 crores top line, and roughly the same burn, so around 300 CR. And FY24, you're saying to 5,000 crores revenues, And in terms of profits or losses, what would that number be?
It'd be lesser. It'd be relatively lesser. Like say, it'll be at least like, 10 to 20% lesser. Again, just to clarify one thing, Rishabh. See, when you say top line, it's so because of the new offerings that we have in the marketplace. Everything is not revenue technically. Everything is GMV, but the way billing methodology happens for a see if a farmer directly sells to a trader or a retailer, then we only get a take rate. On the other hand, like say in a fulfillment model where we buy and sell, everything becomes revenue and gross margins are a bit different, right? So at the top line level, in terms of the trades happening on the platform, we would go to 1,600 crores, but that's GMV that need not be exactly likely comparables because of the addition of new verticals.
Right. Okay. Thanks for the clarification. KK, given the current funding environment, there is a little bit, the access to capital has definitely become tighter, right, for founders like you. Is there also renewed pressure from investors in terms of getting to profitability?
So I think, let me put it this way, right? I think at Ninjacart, for us, we always had this philosophy, right? Like say, we never had a direct global comparable per se. What we are doing for India is very, very unique for Indian agri because the way Indian agri demographic is very, very different, right? Fragmented supply to fragmented demand. A lot of global counterparts have very concentrated supply to concentrated demand, right? So we don't have a direct comparable per se. So we had to really innovate for our space, right? We had to really innovate for India. So our thesis always was, are we doing the right thing? Are we building a viable, sustainable, scalable business, right? So it is not just because of obviously there are some external sentiment changes. I'm not discarding that, but I think within Ninjacart this change happened like say roughly 2.5 years back. We knew we had built we have got a very good scale in certain cities like say Bangalore, Chennai, a few of our cities. So back then we had started focusing on profitability, right? So it's not like a change that happened like say last year. It happened like say roughly 2.5 years back for us. And from my investor point of view, I think we have very, very good backers. It is always about like say building sustainable, scalable businesses. It is we were never focused on only on top line or only on bottom line per se. For us, it's always a mix of both.
Right, got it. All right, KK. Another point of conversation with Ninjacart has always been the fundraise part of Ninjacart, right? Will you be tapping the markets anytime soon, or is there enough cash in the bank? And also, about 2 years back is when you raised money from Walmart, Flipkart, right? That was a massive round at north of $100 million valuation. So, what's your latest on valuation as well?
I think. See, okay. So let me first address the fundraise or the runway. See, okay, we raised money like say 2 years back, beginning of this year, right? We had roughly like a 3 to 4 years runway, right? And as we speak, because 50% of business units are profitable, right? Like say that's generating cash. So our runway still remains at like say 3 to 4 years. By the end of this year, I strongly believe like say because again 80% of the business is going to become profitable, right? It'll again we will still have like say 3 to 4 years runway. So from that point of view, I think let's say we don't with the money that we have today, I think we can run the company profitable. That's not a point. However, because of the new verticals that we launched in the marketplace, right? We believe we are able to grow much faster now. Last year we grew 1.6 times. Okay, and this year, as we speak, I think we're cruising towards a 2.5 to 3x growth journey this year, right? And it is a more sustainable, profitable journey, right? So with this, I think we still have a huge market to capture. It's a very large market. So we believe, like say, we'll probably go on to raise funds from a market expansion point of view, not because of profitability pressure, but like say, but surely to expand, like say, capture the space faster. Yeah, so that's honest. And see, to be honest, like say, Rishabh, like say, you don't like say work towards a valuation, right? Like say we work towards creating value for users. Like as many number of are we building are we adding more value to more number of users in our agri space? And in this process, are we building a sustainable, profitable company, right? I think this is what we keep focusing on. Valuation is probably an outcome. So we are open towards that, right? So it is always, as long as we are sure that we're adding value to the users and we're building a profitable, scalable, sustainable company, I think we're on the right path. So we will probably go on to look for a raise sometime next year, purely to fuel our expansion strategy.
Right. Very, very interesting points there, KK. Thanks so much for taking time out. Viewers, that was Kartheeswaran KK, the co-founder and CEO of Ninjacart.